Alright, so for this video, I'll be going over turtle souping, which I believe is the most underrated entry technique and can yield you the highest RR. Okay, so before I get into this video, I highly suggest you watch Romeo's course fully from start to finish, his time and price course, which are pretty easy to find online. But I'll basically be going over a lot of what he taught because ICT doesn't talk about turtle souping much. Um, but you can learn from him first. His videos are pretty long though, but he'll go in more in depth than me, because this will be pretty basic. Well, I'll try to keep it pretty simple. But before I get into this, you should probably watch Romeo's first because I'll be teaching a lot of what he taught basically. Okay, so the number one thing when trading turtle soup in any concept is to trade with order flow. Okay, a lot of people get caught up in trading the 1 minute time frame and they forget that the 15-minute or anything higher is against them. Okay, so say this is the 15-minute chart, right? We're breaking highs, rejecting lows, breaking highs, rejecting lows, breaking highs, rejecting lows, like that, right? And we get a 15-minute retracement right here into an FEG, right? So we're focusing on, where's the little circle at? Focusing on this piece of price right here. Okay, so say we get a retracement into a 15-minute FEG. This is the 15-minute time frame, right? In this retracement price leg, on the 1 minute, right, it's gonna look like this: breaking lows, rejecting highs, respecting bearish PDAs, disrespecting bullish PDAs, until we get to that higher time frame PDA, which is the gray zone, which is where the change in state of delivery happens, the order block, right? Turtle soup, order flow changes, and we go higher, which also happens to be a market maker buy model, right? So all of these concepts, right, can be put together and become very, very easy if you simply trade with order flow, right? If you're trading against order flow and you try shorting here on the 1 minute time frame, when 15-minute is clearly bullish, right, and you try shorting this FVG breaker unicorn or something, but then you get stopped. Why is that? Because we just tapped into a 15-minute higher time frame PDA in bullish order flow. Okay, so you don't want to be focusing on the 1 minute trend or order flow, right? You want to be trading against this. Okay, so you want to trade with higher time frame order flow. So if higher time frame is bullish, you want to be looking for longs, and at that moment, right, lower time frame should be bearish, but you should still be looking for longs because you want to follow the higher time frame, right? So this is likely manipulation down or a retracement on the higher time frame to then continue higher. But if you only focus on the 1 minute, you're going to get caught up in this and you're going to get stopped out. Okay, so the number one thing always is to trade with higher time frame order flow and trade against lower time frame order flow or the current time frame that you're on. Okay, so this doesn't just have to be the 1 minute, right? You could do the daily 4 hour whatever. Okay, but you want to be trading against lower time frame order flow but with higher time frame order flow. Okay. So how do you know this reversal is going to happen though? How do you know how deep it's going to dig? Okay. Say this is your higher time frame PDA. Okay. And we start accumulating above it. Right. This is very, very basic. Accumulation above it. And we have 930 opening price right here, which I'll annotate in a second. Right. But say we go below 930 open, below accumulation, into a higher time frame PDA, right? That's a very, very obvious reversal in turtle soup. Okay, so say this is 930 open. Right. You want to be buying below opening price, any opening price, any significant opening price. So that could be a candle open, a session open, 9:30 midnight open, right? Whatever. You want to be buying below it when in bullish order flow and selling above that price in bearish order flow. Okay, so say this is the higher time frame, this is the lower time frame, right? And even if the lower time frame is bearish, right? Lower time frame looks bearish, right? But we still want to look for longs because we want to trade against this, and we want to trade with higher time frame order flow. So this is how you often catch the top or bottom, right? Which is what most people have a hard time with. But it's simply trading with higher time frame order flow into a higher time frame PDA, right? When time and price align. So time is saying to buy because we're below here, and we may be below midnight open as well. So that'd be a deep discount. Okay. So if we're below 930 open, well, we'll just use 930 for now. We're below 930, right? So time is saying to buy. We're in bullish order flow. Order flow is saying to buy. We're in an accumulation and we just manipulated. So we can anticipate this to be manipulation. So what would power 3 be saying? To buy for the distribution. And then we're in this PDA as well. So price is telling us to buy, right? So this is the perfect buying opportunity. But if you're caught up in this 1 minute order flow, in this 1 minute market structure shift, it's telling you sell. But this 1 minute market structure shift and 1 minute order flow is telling you to sell, and higher time frame order flow, higher time frame PDA, time is all telling you to buy. So why would you sell here? Makes no sense. The only way you would sell here is if you're stuck on the 1 minute time frame and you see everything as market structure shift, right? Which is why you want to fade market structure shift, right? As Romeo stated, a lower time, oh wait, this is backwards. A lower time frame market structure shift is less important than a higher time frame PDA. So here on the 1 minute, it looks like we got a market structure shift to the downside. But we just tapped into a higher time frame PDA in bullish order flow. So before we even try to get into any precise entry, right? What is the higher time frame bias? Higher time frame bias is up. Okay? As soon as we tap into this PDA in bullish order flow, our bias is up. Okay? That's just bias, okay? So when you implement time, price, right, power 3, everything, they're all telling you to buy. But if you only look at market structure shift, it's telling you to sell, right? Which is why you should be looking at the higher time frame PDA, because this is where the change in state of delivery will happen. This is where the top and bottoms will happen in this higher time frame PDA, okay? Which is why it's more important than a lower time frame market structure shift. The market does not care about a market structure shift, okay? Which is why you should stop looking at every single shift in structure, and you should start looking at the higher time frame. The higher time frame will allow you to catch larger moves, allow you to catch top and bottoms if you really want to. But you trade with order flow and use higher time frame PDAs, the 1 minute becomes very easy. Okay. So now, before I get into actual chart examples, right? And I'll go into some Twitter examples as well. The last way to spot turtle soup is by trading turtle soup with SMT, right? So I'll do an example here and then I'll show an actual example. But say we're in bullish order flow here. NQ creates a lower low, right? NQ creates a lower low. Bro. NQ. And then ES. Fails to create a lower low. Both in bullish order flow. Okay. So hopefully you learned rejection blocks by now, right? But when there is an SMT and a rejection block, or any PDA, but mostly rejection blocks, right? This will be a turtle soup SMT. So we're below the low on NQ, but we're in a rejection block on ES, right? So if we were only focusing on ES, we expect this rejection block to hold, right? So ES should start pumping, and NQ should turtle soup this low and start pumping as well, right? So this is why it's very important to know rejection blocks, even though many people don't like to. It's the most common PDA used for SMT turtle soups because it's the highest and lowest PDA on the PD area matrix, right? You have rejection block and then order block, I believe. Fair value gap, I think. Breaker or something along those lines, right? But your rejection block in this range, right, is the lowest PDA you could have. Because typically, when they diverge, they don't diverge by much, but they diverge a little bit, right? By sweep, one takes the high, one takes the higher low, one doesn't, right? So if we're tapping into a rejection block on one of the pairs, but we sweep the low on the other pair, right? You can anticipate this to be a turtle soup. And if you have a higher time frame PDA below an opening price, right? Time and price align, power of 3, whatever. If all of those align, then you have yourself a good turtle soup. Okay. So, shoot. I'll show a real chart example of this SMT turtle soup. Even though I personally don't use it much myself, right? But it's something I'd probably use if I didn't only trade on phone. Right. So we have, where's this at? Yeah, okay, right here. So this is NQ on the left, ES on the right. Right. NQ, ES. Okay. So NQ here dumps at open, right? Whereas ES does not. So we have an SMT here because NQ takes this low, ES doesn't, right? But let's see, is ES tapping into a PDA? Yes, right here, right? ES is tapping into this rejection block, even though it's not the highest probability. I mean, what other PDA are you going to use, right? It's still a rejection block, just not the highest probability, right? So ES tapped into this rejection block, but NQ swept this low at the same time, right? So not even right here, you're not even using any PDA anytime. Okay, this is strictly SMT. So if you combine it all together, you have a very, very high win rate, right? So NQ takes it slow, ES doesn't. So we have a huge SMT here, right? So we end up turtle souping the slow while ES is in a rejection block. So that's an easy long. But you wouldn't want to hold on to this long for too long, because if you look at the higher time frame, right, we are clearly bearish. So right here, you would be trading the manipulation up. Okay, so you're trading the manipulation up here. So you wouldn't want to hold too long. You wouldn't want to try and catch the whole daily range, because you're trading the manipulation up. It's not impossible to trade against order flow. It's just, if you want to catch the big moves, if you want to have an easier time, if you're just starting out, then I highly suggest you trade with order flow, because it'll be a lot easier. But you can still scalp these small moves. It's just, you're not going to catch as large of moves, obviously, if you're trading against order flow, right? So that's an example of the SMT SMT turtle soup. But I'll show some examples. Where did my stuff go? Where? Okay. So that's the yeah. Okay. So I'll show some examples here, right? So we are clearly in bearish order flow, right? And on this day, here's 9:30 opening price. Okay. So you want to be selling above opening price when in bearish order flow. You want to be buying below opening price when in bullish order flow. Okay, it's that simple. Very, 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 very simple. So we're clearly in bearish order flow. So you want to be looking to sell above 9:30 opening price. Okay, but how do you know how high it's going to go? How do you know how low it's going to go if you're buying, right? This is where you use PDAs, okay? So time and price need to align. So here on the 15-minute, there's this 15-minute rejection block right here. Okay. We have this 15-minute rejection block, and we're above 9:30 open. Right. So time is saying to sell above here because we're in bearish order flow. Price is saying to sell here at this 15-minute rejection block, right? And bro, I keep on losing my thing. Let me go back really quick. Copy this, bro, so I don't lose it. Yo, did I lose it, bro? Okay, well, it's fine. Remove everything. 15-minute rejection block at this dotted line. 9:30 open, right? So price is saying to sell above. Price is saying to sell this rejection block. Time is saying to sell at above 9:30 open because we're in bearish order flow, right? So this alone, right, is an easy short. And if you look right here, we're above this high, right? So that's a turtle soup. Okay, or if you go to the higher time frame, there's another high where we manipulate above this. Oh wait, no, this would be the high. We already took out that high, right? But the reason this was the turtle soup, right, and this wasn't, is because there's no higher time frame PDA here. When we swept this high, we're not tapping into anything, right? There's fair value gap up here, but we never tapped it. So this was obvious, taking out buy side to then manipulate down, to then manipulate up, to then continue down, right? So we end up turtle souping this high. Very, very simple. It's a lot simpler than people make it to be, right? But why didn't it go past this? If price went past this, right, what would it be reaching for? There's nothing for it to reach for. This is why you need to use draw on liquidity. There's a breakaway gap here, right, which we shouldn't expect to be filled because of this BPR here, which I won't go into too in depth, right? But this is a breakaway gap here, right? There's a breakaway gap here with low resistance liquidity lows down here, and probably a higher time frame draw like this wick, right? Rejection blocks, very good draw. Rejection block down here, old low, liquidity, rejection block, right? All of these are valid draw levels, right? On the 4 hour here, we're also inside of a 4 hour FEG, right? We don't know where it's going to go. We don't know how deep it's going to go until you look at the higher time frame and get a more precise entry. But by tapping into this 4 hour FEG, right, our bias should be to respect this FEG and dump, which is what ends up happening, right? So our bias is down just based off that 4 hour FEG, right? So we have this breakaway gap here and no real other PDAs here except for this rejection block, but it's not really the highest probability, right? Which we end up tapping into twice. Okay, so there's no reason for price to go up higher because we have this wick, old low liquidity, and this wick down here, right? And these low resistance lows. So logically, what makes sense? If we're only using draw on liquidity, right, price should not go above here, correct? This high should stay intact because we sweep this liquidity, right? And now this should just be a retracement, which is what we get, right? And this is yeah, this is a premium of this range, right? We're in a, well, obviously a rejection block is going to be in a premium, right? But you'd be looking to sell in the premium of this range. If we break this range high, then we probably go higher, but that's not what you want. So you want this high to stay intact, right? So we tap into this PDA and we're above 930 open, right? You don't want to go too far above 930 open or else that'll likely be the true expansion. You want a relatively small, right, manipulation above opening price of whatever you're using, right? So there's an easy short as soon as we tap into that rejection block, right? You short there, or you wait for this rejection and enter here if you're too scared or you're just starting out, right? Enter off the candle after. You can wait for a rejection, which is what I would do if you're using more risk, right? And then you could set your stop uh, at the high, but this one would technically end up getting hit because there's a range above a range, right? Which is, I won't get into right now because it's a little more complicated. But if you are turtle souping, right, you should put it slightly higher or above the higher time frame PDA, like here, or above a lower time frame PDA inside of the higher time frame PDA, right? So there's no really other one right here, which is kind of a bad example. But because this higher time frame PDA is so small, I put it above the high, right? Because we end up turtle souping this range above a range, okay? But I won't get too much into that. Right, so if you do end up entering here though, at this higher time frame PDA, simply by targeting the low, you already have a 1 to 15, okay? That's by targeting this low, right? You're trading with order flow, so you could target way farther targets because you're trading with order flow, right? If you're trading it with against order flow, you don't want to be targeting too far, right? So this could have easily have yielded you 10 plus RR at least, right? Depends how much you are risking, right? But this would be the turtle soup here, right? Into a higher time frame PDA, time sets to go down. Okay. For a a lot of the times though, when you're looking for a true turtle soup, is you want price to viciously, right, target the lows or highs. You want it to viciously sweep liquidity with a big candle, right? You typically do not want it to wick, just have a small wick because it won't what am I trying to say, bro? It won't sweep much liquidity, basically. All right, you want it to have a big candle above a high or a low, right? Depending on order flow, right? Which it may be scary at first, right? But in bearish order flow, you want to be selling the big green candles like this, or in bullish order flow, you want to be buying the big black candles. Okay, so in this example, right, there is this breakaway gap here, right? And there is also this breaker slash BPR right there. All right. And higher time frame order flow, right, says bearish, right? So we should be looking for shorts. And we are also inside of this 1 hour FEG. So the higher time frame bias, we don't know how deep it's going to dig, right? But the higher time frame bias is bearish because we are inside this FEG. We expect this FEG to be respected and then to dump from it. So our bias is bearish while inside of this range here, right? From this FEG, our bias is bearish. Okay. So we should be looking for shorts, right, in here. But how do you know how high it's going to go? Because you use a higher time frame PDA, right? Like this breaker BPR here, right? But why don't you use these FEGs down here, right? It's because these are in a discount. This FVG, right, you don't use because if you look, right, at the lower time frame, right, um, this wasn't a very vicious move, right? So here, we just get a move up and we just barely wick above into a premium and into this FVG, right? Which is what you don't want to see. Because short-term order flow is bearish. So because this isn't, right, a very strong high, because we didn't really sweep out anything, right? You shouldn't anticipate this to hold, really, right? Because we aren't very in a premium. The bodies aren't even in a premium, right? We just wicked into this FEG, right? We barely swept any liquidity. So why should this be the high, right? We end up dumping internal sweeping here, which I actually took into this 5-minute FEG, right? Below this low into this 5-minute FEG. All it is was just following this 1-minute order flow, right? So since this was against higher time frame order flow, right, you want to take out at this high, right? You wouldn't want to hold for too long, right? So if we go to the higher time frame, let's go back to the 1 minute. We still have this breaker right here, right? That's left untapped, right? So when we move into this breaker, right, we get a vicious move here. All green candles, large green candles, getting people to buy, liquidating sellers here, right? Whereas here, it was a very slow move, right? Nothing really happened. Okay. So here we get a vicious move into this PDA, which is very likely to be the high, right? Higher time frame order flow is bearish, and we get a vicious move above this high, right? Look at the whole move. Okay. These are very small candles, right? Expand, retrace, small candles, consolidate, expand again, right? Reverse, right? Very, very small candles, no really vicious pump above a high or into a PDA. And also, these are all in discount, right? So all this is doing is just retracing here, right? But the high gets put in once we viciously push above this high into a higher time frame PDA, right? With a breakaway gap above. So we shouldn't expect price to go any higher than this. So we should anticipate it to respect this price level right here, right? Because we're above a high into a higher time frame PDA when order flow is bearish, right? And also, I bet if you use the 15-minute candle, yeah, right here, or the 1 hour. If we mark a 1 hour opening price, right? Boom. So this is what I mean by opening candle price, 1 hour candle opening price, right? This ended up being a doji, but this is still the manipulation above opening price, right? So you want to be selling above this 1 hour candle opening price, which is what it does here, right? It's also probably a 4 hour. 4 hour we already manipulated above the wick, so you want to be selling, right, in this 1 hour candle wick, because this is power of 3, or open high low close, yeah. So you want to be selling in this wick, right? So there's the 1 hour candle open, right? We're trading the 1 hour power of 3, okay? And we go above it here viciously, above this high, into this higher time frame PDA, wall and bearish order flow, right? So this is an easy turtle soup as well, right? It's not the cleanest on a lower time frame, right? But higher time frame, it's a little cleaner, right? So we get this one large candle on the 5 minute, right, into this PDA. It's a very, very obvious short, right? But a lot of the times, if you don't want to enter off of here, which is what I wouldn't if you're just starting out, right? I'd wait for a black candle to close next, right? So you wait for this black candle to close next, boom. As soon as that closes, you short. Or, like in this example, you wait for this rejection block, right? This completely random level that everyone sleeps on, right? You get a rejection block from that move, that 5 minute rejection block right there. Boom, enter short again right there. Turtle soup, boom, reject, displace. On the 1 minute, displace, hit this 5 minute rejection block perfectly. Within one tick, or yeah, or wait, yeah, right. So that was another turtle soup, right? Like literally, I can't even really even explain it that much, but the main concept behind it is a higher time frame PDA, lower time frame market structure shift is less important than a higher time frame PDA into trade with order flow, right? It's literally that simple. Once you're inside of a higher time frame PDA, you could look for any entry model, okay? You don't even have the turtle soup, okay? On the higher time frame, this is a turtle soup, right? After the fact, right? You're still trading turtle soup on a higher time frame, essentially, right? If you sell above here, you're turtle souping, okay? So all you have to do is look for any entry model after we tap into this PDA and above this high and above hourly candle open, right? So boom, even if you trade market structure shift, we get a market structure shift here, okay? You trade freaking simple power of 3, right? This is another re-entry short into the rejection block that we had here, the 5 minute rejection block, right? There's your rejection block, power 3, accumulation, obvious manipulation into the rejection block, easy short right there. Boom. All this low resistance liquidity. If you trade MMXM, boom. SMR here. Is there SMT there? No, there's not. But you don't really need it. Okay. But MMXM into a higher time frame PDA. You sell here. That's a turtle soup on the higher time frame. Boom. You get a market structure shift. What? You get an order block. Here, literally any entry model you want. You have your breaker. If you want to sell breaker here or sell NFEG here, right? You still catch the whole move, but you're still recognizing this as a turtle soup, right? If you're not confident enough to trade sell up here, right? You could wait for any other entry model to form in here. Right. So if you want to catch lower time frame turtle soups like on the 1 minute, right? You could just use the 5 minute or the 15 minute, right? So for example, here we get this reaction off that 15-minute PDA, right? And we start dumping. So order flow has changed, and we're this is continuing this expansion, right? Expansion, retracement, expansion. Simple IPTA price delivery. Okay. So after this large displacement down, right, you'd be looking to sell any pop above a high, right? We're breaking lows, rejecting highs, respecting bearish PDAs, right? So you want to be selling above a high, right? So we get this high here. We start viciously attacking it right here with these large green candles, right? Into this 5-minute BPR right here, right? 5-minute FEG right here, right? We respect both. We pop above this high, right, into that BPR. Sell as soon as it hits this, because this is only a 5-minute PDA, right? So if you're on the 1 minute, you could sell that instantly. You don't even need to wait for another model. Boom. Sell that into the 5-minute BPR. We displace away. A plus rejection block right here. Boom. Pyramid again if you want to. Right there. Your stop is literally microscopic, bro. If you have this stop, you target the closest low. You have a 1 to 10. Now imagine you hold with order flow, you target this low. That's a 1 to 18. Okay? That's from one trade. From turtle souping and rejection block. Right? If you end up turtle souping this, you set your stop as soon as that candle rejects right above there. You target the low. That's a 1 to 28. If you target the low with order flow or even lower, that's a 1 to 47. Okay? So this goes to show from these very, very simple trades that you can get the highest RR, 1 to 40, 1 to 20, or whatever, So if you're trading on the 1 minute, if you want a 1 minute turtle soup, then just use like the 5 or 15 minute, right? I don't really trade anything above that, so I just use the 5 and 15 minute. And it's pretty simple as long as you follow order flow, right? So like here, there's probably another one. Yep. Inside this 5-minute FEG. Yep, perfect. 15-minute FEG right at that line. Right. Now if we go down to it. Perfect. Right. Here's the 15-minute FEG, this black line. Inside this 5-minute FEG. Right. Inside a bearish order flow. So our bias, as soon as we tap into this, our bias is looking for shorts. Right. On the 1 minute, we might not instantly dump off of it. But on the 5-minute, right, we end up respecting it, which is what you want to see because we're in bearish order flow. Okay. So here we start accumulating, right, inside this FEG, manipulate, pop above this high with a vicious candle, very big green candle, above this high, into this 15-minute FEG. Boom, short that right there. Turtle soup that. Boom, dumps off. Sells off. You don't really get another entry here, but either way, you're up and you're already selling at the top, right? If you're short here, bro, this is like insane. Short here, stop above as soon as this candle closes, right? Because there's no reason for price to go back up there. We already hit this level, right? There's no other range above this range, right? So there's no reason for it to soup that again, okay? And you're trading with order flow. If you're simply targeting this low, boom, 1 to 27. If you target a higher time frame objective, like, holy, I know you wouldn't hold for this long, right? But if you target that higher time frame low, that's a 1 to 100, okay? It's obviously unrealistic, but it goes to show, which is the most like you'd likely target this low, right? But this would already be a 1 to 30-ish, okay? So you sell this pop above the high, accumulation, manipulation, distribution, right? The time is right to sell right here because this should be the manipulation, right? So time is saying to short. Price, we're in an FVG above this high, vicious candle above, easy turtle soup with order flow, right? Order flow is number one. It's so easy if you trade with order flow. You sell any pop above a high, like right here, boom, easy turtle soup with order flow. I didn't even look at a higher time frame PDA. Easy turtle soup, boom, right here. Sell a pop above a high, easy turtle soup, right? This is literally just trading with order flow. If you trade with order flow, it is so easy. Like, you don't even need a higher time frame PDA, right? But obviously you should, because it will help refine your entry. Okay, so those are some examples. Literally just trade with order flow, and I'll go over some Twitter examples just in case people are curious. Okay, so yes, okay, so here order flow is bearish, right? And I believe we're inside of I think the example is right here. Yeah, that was recent. Where is it? Friday. Thursday, October 19th. It's on Thursday. Yeah, right here. I believe we were in an FEG. Yes. This FEG right here. Old low right here, BPR. Right. 15-minute FEG open right here. I'm not gonna, you don't really need the whole FEG, but right. So boom, those three higher time frame PDAs right there were clearly in bearish order flow. Price is clearly trying to reach somewhere quickly, right? So you want to sell these pops above these highs, right? So we push up above this high, well, in the PDA. Boom, push above the high, right there. Turtle soup, pretty simple turtle soup, and then yeah, you use time here. I use quarterly theory here, right? So I anticipated a reversal here. Rejection block, I pyramided it here. Rejection block, and then there's X reversal. Right, and we also had these low resistance lows in bearish order flow. Right, so that's a very easy target. And then we get this manipulation up, right, in bearish order flow. And then we get this pop above this high, which is a turtle soup. Right. So you want to be selling any of these fake outs above these highs. And then this one had an obvious draw of a 1 hour FEG, right? We were just short of it right here. So the draw was pretty obvious here, which is why I was confident. So, we're anticipating manipulation. Do I even turtle soup here? Never mind, I don't. Okay, yeah, I do right here. So here, this was a 15-minute rejection block right here. Okay. And we end up tapping into it perfectly to the tick, right? But then we ended up going back into it one more time, which is what I added. I knew that was a turtle soup, right? One, because we were in clear bullish order flow, right? Tapping into a PDA and a higher time frame. There was another higher time frame PDA here as well, right? So this was an MMXM to continue higher, right? And we just pushed below this low right here, okay? Back into the rejection block. Just think about this logically, right? The draw is obvious higher, order flow is bearish or bullish, so we should be looking for longs, right? Would it make sense for price to take out this low? No, right? We already tapped into the PDA. There's no other PDA here to tap into besides this rejection block or sweep this turtle sweep this low, right? It wouldn't logically make sense to go below this, okay? So order flow, shows on order flow. Right, we just tap into this inverse again, and then boom, and I'm taking that. I don't know why it's not loading. Turtle soup for that. Okay. I don't really show higher time frame analysis too well. I mean, yeah, okay, right there. Boom. Okay, right here, higher time frame was clearly bearish here. It's kind of hard to see, but higher time frame was bearish, and we tapped into this 1 hour FEG, okay? And then right here, we hit into 2 standard deviation right there, which I won't go into too deep into, but we should anticipate a reversal here, right? We get this vicious move above this high, boom, right here. So why wasn't this high a turtle soup? One, we didn't tap into this high, into this FEG, I mean, right? But also, I mean, it is, but just on a higher time frame, right? So this is a range above a range again. Okay, so we turtle soup this high, boom, tap into the FEG, we get this rejection right here. I know we shouldn't go above this high. We could trade to this wick, this rejection block, right? But we should be targeting these low resistance lows, right? This is the draw on liquidity. Okay, there's no reason for price to go any higher now. Okay, we end up dumping, boom, yeah, and then yeah, it just melts. This I don't show a PDA, so it's like kind of hard to tell. Yeah, okay, so right here, it's kind of hard to tell higher time frame order flow, but I bet it was bearish. Because of this large move down, right? We manipulated, it looks like we manipulated above here, accumulation, manipulation, distribution, right? So at the start of this distribution, we had this order block right here, which had an FEG as well. So that's why you'd mark out the wick, because we created this FEG. Okay, so you mark out the wick, that's the higher time frame PDA. Right, we tap into it, we sweep this high. Sweep the high. Boom, tap into it right there. Reject off of it. So I waited for this candle to close and reject, right? We also have this accumulation right here. Then manipulate above. with large vicious candles into this higher time frame PDA, taking out all this liquidity. We have low resistance liquidity below in bearish order flow, right? So that's an obvious short again. Boom. Use higher time frame PDAs to filter out and trade with order flow. It's very simple. Expand or trace expand. Okay, that is honestly good enough. It's pretty basic, honestly. The main two key points, right, are to trade with order flow, trade with order flow, and to use higher time frame PDAs to filter out trades, right? And honestly, trade with, or I'll just add it here. Trade with higher time frame order flow. Trade against lower time frame order flow or the current time frame. It's literally that simple, honestly. And then you could use time to also filter out trades, right? This is very basic, right? But these are your main points, just like every single thing. I'm telling you, it is not that difficult. Just people make it seem a lot harder than it actually is. And that's basically it.